everyone. It is a gloriously beautiful day here in Northern California. 72 degrees, sunny. What more could you ask for? Spring is officially less than 1 month away. Can you stand it? I tell you, it's exciting. And for those that have asked about the H2O situation here in California, I'm happy to tell you that our reservoirs have really been filling up nicely here with all the rain that we've gotten so far this winter. I think Southern California was expecting more, and they haven't gotten it, but our weather pattern's been great. I wouldn't say it was an excessively rainy season, but we've certainly far different, as you can see by the green grass behind it, in the last couple of years where it was just dry, and really no rain to speak of after December. Be that as it may, anybody that follows the markets and has investments, and those who try to chart a course to make things favorable for the market, i.e. the Federal Reserve, must have breathed a big sigh of relief last week with a really good 600-700 point rally that unfolded over August, about 3 or 4 days. And as you recall from last week's upload, I had been looking for a rally to come in. It has come in, and now it's really a question of how far this rally is going to carry, and is it useful for me if I want to unload some of my positions. Well, predictions being predictions, nothing's ever 100%, but I can tell you that there will probably be a bit of backing and filling this week. There may be some more of the end of the bad news stream may come out on Monday. We've got problems in India over there coming to fore. The rupee is starting to weaken a lot over there, or has been dramatically. So there's still some pretty big fault lines with some pretty big population centers around the world. China, Hong Kong, Singapore. We have a lot of declining property values there now. We have a lot of bad loans starting to surface. So World Bank is definitely going to be in distress mode. And I think it's interesting behind the scenes that the Federal Reserve has been quietly doing more stress testing of banks, something they did a year ago, and once again pushing banks to increase their reserves. Well, it's really difficult in the face of basically flat interest rates across the curve, from zero on overnight borrowing, 0.25% on overnight borrowing, up to 1.75% for 10 years. There's not a lot of ways that banks can make money riding on the coattails of the Federal Reserve anymore, and that's why banking has taken such a tremendous hit over the past 3 months or so. So I would expect that the news cycle would continue to improve marginally here. One of the themes that I've hit also and talked about is retailing and some of the stresses in retailing. And we can see the way that Walmart came out last week and told about some of their woes and some of their store sales. It's very difficult when you create a behemoth that large with, I think, $300 billion worth of sales or more. It's very difficult to get marginal growth to really be effective anymore beyond that, and then it becomes simply a game of decline, store closings and blah blah blah, the circle of, well, we saw that befell Sears and Kmart. So after, I think we'll have a pullback and a test of that probably dip below 15,000, the 16,000 level again. I would expect it just to strengthen and really go on to maybe a more significant rally, perhaps even up to the 17,000 level. So we shall see. Nothing ever goes in a straight line, and the caveat is always check with your own financial advisor before you make any moves. On the economic front, the job market still continues to look pretty good, pretty robust, at least for low-level jobs in this country. So the real issue becomes, is the United States capable of standing alone, isolated from the rest of the world, and enjoying economic success? So that's the that's $64,000 question, and we will know in the fullness of time. Anyway, stay tuned, and thanks so much for watching, everyone. And I hope you get a chance to go out, take a walk, and enjoy the good weather if you have it where you are. Thanks, everyone.